Todd, thank you so much for joining us.
It's a pleasure to be with you.
All right. Based on the pace that we're at 1.06 trillion according to your data. We're well on pace to pass last year's record of 1.12 trillion. What does that say about ETFs and investor appetite for this particular investment vehicle?
We found that investors are increasingly turning to ETFs to get their equity and their fixed income, as well as other asset class exposure. We've seen strong demand for some of those low-cost, broadly diversified products that serve as a building block in many investors' portfolios. We're seeing advisors increasingly embrace ETFs, institutions turning to ETFs to be tactical. ETFs are here to stay.
All right, you shared some of the top ETF inflows for us for this week. The top one is the AGG ETF. It's the iShares Core U.S. Aggregate Bond ETF. The fact that investors are turning to bonds and bond ETFs right now, what do you think that says about how investors feel about this market?
So I think there's a combination of things that are happening. Fixed income ETFs have been popular for much of this year, but now we're heading in next week to a Fed meeting when I think there's general consensus that the Fed is going to continue to cut interest rates. So investors are getting ahead of that. But also, we've seen a volatile year in the equity and the fixed income markets. And so bonds and bond ETFs like AGG can serve as a ballast to a portfolio.
All right. Another one of the top inflows was the IEF, the iShares 7 to 10-year Treasury bond ETF. But I want to talk to you about the number 2 spot for ETF inflows, the DIA ETF, which is a Dow Jones ETF. Now, we just saw the Dow actually hit a record. Do you think investors are just trying to chase an index moving higher, or is there some other reason to go into a Dow ETF?
So I think investors are focused on the fact that the stock market continues to hit record levels. DIA and the Dow Jones Industrial Average is quite different than the S&P 500 or the Qs that you normally are going to talk about to get equity exposure. Diversified in a different manner, less technology exposure, more exposure to industrials and financial companies. So if you think the economy is going to be strong heading into the end of the year, DIA could be a good choice as an alternative to the Qs or SPY.